welcome to Real Vision. We're here with Anthony Scaramucci at his restaurant. My God, his restaurant here, Hunt and Fish Club. And
well, give a plug about the food at least.
the food's great. I love it.
Right?
I've had dinner in this room as well as upstairs.
Well, I'm happy because we keep the chef happy. The key to a successful restaurant is keeping the chef happy.
And that's something we have to get into. How you rolled the dice right after the financial crisis, got into starting this place. I mean, that's.
Well, I mean, I did a lot of things right after the financial. We started the SALT conference,
Yep.
which I think you've been to. Got myself on TV, which I didn't expect, and then obviously went through a couple different iterations of political campaigns. But we started this restaurant because Elizabeth Warren, our good friend Elizabeth Warren that loves Wall Street so much, was railing on Wall Street, and I thought, okay, I'm going to put a restaurant together that celebrates all of the fun parts of Wall Street, and that's why there's all kinds of bourbon and steaks and seafood,
Nice.
and of course I'm Italian, so we have a closet hidden Italian menu too that you can always ask for when you come here. So.
One thing I want to get into today, because we've been friends, I'm a fan of your career and such an inspiring.
Well, you wrote an amazing book about Lehman Brothers, by the way.
Thank you.
It's probably 10 years ago now, though, right? When was it? Like 8, 9 years ago?
It was about 11 years ago.
11 years ago, yeah. It was a great book. You started as a frozen meat salesman, though, if I remember correctly from the book, right? Yeah.
Pork chops.
Pork chops. Yeah, I remember the whole thing. It was very good.
Yeah,
you wrote a great book.
When I was at SALT, you came up to me and said, "I like those pork chops, Larry."
Yeah. No, it was a great. I mean, it's a story of human hustle, and it's a story of unbridled ambition to keep yourself moving and try to make some action for yourself.
Yeah, I think that's why.
I love the book. Also, love what you're doing now.
And that's kind of why I've had a connection with you. Just the inspiration of how you came up. You make your way into Harvard, then get into the kind of the asset management side of the business. You sell your company.
Yeah, I sold my first company to Neuberger Berman.
To Neuberger Berman. I mean, take us back to those days. What was
driving?
Well,
I mean, I'll take you all the way back to the 100% polyester days. Okay, so I walked into my Goldman interview. I was at the Harvard Law School. I had 100% poly on, a black poly suit, white poly shirt, black Guido, 100% poly tie. I mean, I was fully flammable for the meeting. A match got struck in the interview room, it would have exploded. So I was in there, and they were talking about the TED spread and interest rates and yield curves, and I was answering all the questions beautifully. And I get up, the guy walks out, he says, "Hey, you're the worst dressed person that we met at the Harvard Law School. I can't take you down to Goldman looking like this." And I remember, oh wow, because my mother thought I looked fantastic in that outfit. I thought that was my best outfit. So I went out and used the credit card. I went to Brooks Brothers and I bought some real fiber, and I went down to Goldman Sachs and hustled my way in there. But for me, I grew up in this blue collar neighborhood. Everybody in my neighborhood had a trade. They were an electrician, a plumber. My dad was a heavy crane operator. There was a whole group of people doing different things, but nobody went to college. So my folks were super locked on, missile lock on college. So I went to Tufts, Harvard Law School, figured I didn't want to practice law. When I got my job at Goldman and eventually found my way to the asset management area, I realized that I needed to start my own business. It was like that Sesame Street thing where which one of these is different from the other? Well, I was different from those guys. Not that they weren't great guys, but I had a different personality. I was probably a little bit more outspoken, a little sharper elbowed, and I said, you know what? I'm never going to fit in here. I didn't have to conform my personality and die of an ulcer or leave and be myself. And so I chose leave and be myself. And I think that's a lesson for your viewers. I mean, don't do what you think you're supposed to do. And if you're living your life in fear, you're actually stupid, because Mel Brooks has the best line about life. You want to hear it?
Sure.
Relax. None of us are getting out of here alive. Okay, so relax. What are you going to do, right? So for me, I'm going to do what I think is right. I left, started my own company. It was reasonably to very successful. We sold it. I'm at Neuberger. They get bought by Lehman, and I had a great time at Lehman. I enjoyed Lehman. I saw Dick Fold the other day, gave him a big hug. I thought he was a terrific guy. It was a bad break what happened to them. And, life moves on, but I was already out of Lehman. I started Skybridge in 2005.
Yeah, take us back to the birth of Skybridge. First of all, what was motivating you? Where did you come up with the idea?
I'm 41 years old. I'm a managing director at Lehman. I didn't grow up at Lehman, so I didn't really fit into the system. I was on the periphery. There was a lot of politics there. I'm not really a great politician, as we discovered in Washington. And so I'm like, let me go start my own business. And so I went to Dick Fold and others. They helped me. They gave me balance sheet capital.
So you went around the street raising capital to start.
Yeah, raising capital to start.
And your vision for Skybridge back then was?
I wanted to be in the hedge fund incubation business.
Yeah.
I liked that idea.
It's like a fund to fund.
Yeah, exactly. So I thought I would do is I would invest in about 15 funds, own a piece of the underlying fund for my clients. So they would get their returns from the fund, plus then I would go out and market those funds to others and raise money for those funds, and then therefore my clients could participate in the equity owner. It was almost like a private equity, VC-like element for hedge funds. Remember, that's 05, 06. Hedge funds are super hot.
Yep.
They got super cold going into the 2010 financial crisis. And, you know, we at that time had backed 8 funds, one of which is
so you
still...
had 8 funds in 2005.
I know. Well, we got to work in 2005, closed our fund at the end of 2005, deployed the capital in 6, 7, and the early part of 8. But now we're reeling in the global financial crisis. I had never been on television before, and then lo and behold, I'm showing up on CNBC Fast Money. I think that's sort of where you and I met originally.
Yes.
And I'm promoting our business, and I'm promoting our conference that I'm launching. And then I learned that Citibank has their fund-to-funds business up for sale, and then I really bet the ranch on that.
Think about that, how important that is for your career, right?
Well, it was a game changer because it was touch and go at Skybridge. I don't know if Skybridge was going to make it or not, but
and you needed the funding to start the Salt and build Salt, right?
Well, Salt, I figured out a way to self-fund. So what I did was I went out and sold registrations, and pursuant to whatever registrations were coming in, I started booking guests and speakers pursuant to the registration. So Salt's always been roughly break even to make a little bit, but not much.
I see.
But the fund of funds, man, I had to borrow every dollar. I took cash out of my life insurance. I took cash out of my house. I did everything I could to maximize the amount of capital I could put into it. And I bought Citibank's fund of funds business.
You bought their fund of funds business in the hole.
Yeah, it was in the hole, yeah.
I mean, you're talking about
no one else wanted it, actually.
Screaming buy.
It was 2009. The deal closed in the early part of 2010.
So valuation, bottom line, it was down from the 2007 peak. It must have been down 50, 60, 70%.
Yeah, I mean, it was, but no one wanted it. So, I mean, the reason why they didn't want it is that, you had hit with that 2008 performance, and the fund was small. And we got very lucky, but we also had very good performance. The guys running that fund accelerated into 9, 10, 11, and that allowed us to raise a ton of capital in 12, 13, and 14. And then into 15, we did quite well as well. And then the early part of 16, we started having a little bit of underperformance, but that was okay. We still had this massive surge. We went from $1 billion under management to $12 billion in about 5 years. And so that was great.
1 billion to 12 in 5 years.
Yeah, $1 billion to 12 billion in 5 years.
That is something else.
We're at 10 now. I mean, we lost a little bit of capital because of my White House fiasco. I had the firm up for sale because you have to do that when you go to serve the government. And then the CFIUS agency at Treasury blocked the deal.
Yes.
They said it was a national security issue, whatever. So we let the deal crater. So I returned back to Skybridge. After my very extended stay in the White House, I went back to Skybridge, and we're building it and growing it again.
So many people have wondered, what was your first experience like in the White House in terms of relative to what you thought it would be going in?
Yeah.
Well,
I mean, listen. I mean,
what's your biggest?
You have to remember.
Message?
I mean, these are very, very bad people. I mean, you have to remember that, like, the people that work in American politics in Washington, by and large, are very bad people. And so that's the reason why the American people hate them, and that's the reason why they have such low approval rating.
I mean, none of these people were from...
They're a bunch of cowards.
These weren't politicians. What do you mean that you're talking about?
No, I mean, what happened was Reince Priebus staffed that White House. He flooded it with RNC people that hated Trump. And so now there was a huge civil war going on between the Trump loyalists and the RNC people inside the White House. And so then Priebus, as White House Chief of Staff, blocked my position into the Office of Public Liaison.
I see. Okay.
And then I did something really stupid, which your viewers should learn from. I put my pride and ego into that. I said, okay, I gave that guy loads of money at the RNC, but he's just a political hack. He's now blocking me for no reason. And it turned out I shouldn't have taken it that personally. He was doing it to Christie and Giuliani and anybody for that matter that came from the New York area that had a relationship with Trump. So that's fine.
It's a great lesson. Don't take things personally.
Yeah, don't take things personally. But I did. I took it personally. I let my pride and my ego get to me. So when the president realized he had a problem with Priebus and Bannon, he called me to clean those guys out. And so I went down there with like a chainsaw and a hockey mask on. That's a really stupid thing, okay? So learning lesson number one, your ego and your pride are going up, your intelligence is going down. So don't put your pride and ego into things. Detach yourself. Don't take things personally. Priebus's blocking of me had more to do with his personality and his insecurities than it did with me. I took it too personally. So now I'm fired from the White House. I did something stupid, got myself fired. I said something inappropriate about Steve Bannon, although it was a legendary comment. I mean, I got a huge fan base with the millennial community because I said something about Steve Bannon that he probably can't do, but it was really funny. And so I got myself fired, and I went back to work. But learning lesson number one, don't take things too seriously. When you're making mistakes, I'm an entrepreneur, you're an entrepreneur, you make colossal mistakes. You can't live your life thinking about and recasting and rethinking all your mistakes. You have to always forgive yourself. And so take the millstone of regret off of your neck, put it to the side, and go forward and live your life. And so I tell young kids, own your mistakes. I made a mistake. I don't blame anybody else, but I've also forgiven myself. I've dusted myself off, and I'm moving on.
Over the years, I've done now 126 speeches in 16 countries. The best conference I've ever been to is the SALT conference.
Well, I appreciate it. That's very kind of you.
I mean, and I hear that from clients. All our hedge fund clients are. I mean, most of them, every one of them around the world has been to your conference.
Well, I appreciate that. It means a lot to me because we put a lot of time, energy, and effort into that. We curate that content. I try to design it, and my team tries to design it in a way where we want people to learn something that they wouldn't typically learn in a couple of days.
So you make your first call to that first speaker. I think was it George Bush you landed first?
So
who made the call?
The first speaker I landed was Mike Milken.
Okay.
And then the second speaker I landed was George Bush. We didn't talk to him directly. We talked to his speaking agency. And then we also got Bill Clinton. And so again, through the speaking agencies. And so
you had Clinton, Bush.
Yeah. We
and
had
Michael
Gordon Brown, Michael Milken,
This
Tony
is all
Blair.
in the first 2-3 years of SALT.
Yeah. I figured if we're gonna do this thing, let's go big. So I tried to get the biggest, most prominent personalities.
That's
there was
fantastic.
There was one year where I had Will Smith. So for me, SALT conferences helped me meet people and broaden out my network.
Let's look at markets now, because you've got, I think, incredible insights, not just to the White House, but to finance. And most people don't have that, intersection between Wall Street.
So the bad news going on in the White House is that unfortunately the president doesn't listen to anybody, and so he's a prisoner to his own ego, and he's a prisoner to his own narcissism. So what's happening now in the White House is they're trying to give him advice how to operate in the trade situation, how to operate it. Don't listen to anybody. He really thinks he's the smartest person in the room. So when you think you're the smartest person in the room, you're not taking input from any place, and you're putting yourself in a danger zone.
There must be a consensus in the White House around the U.S. dollar, because if you look back 2014, 15, 16, every time the dollar's made a kind of a vicious move up toward 98.9 in the dollar index, the global economy is massively weakened without tariffs. 2015, 16, dollar makes a move from say 88 to the 100 handle, and the U.S. economy and the global economy suffered. We had the worst earnings recession. Now the dollar's made another vicious move, and what I'm seeing around the world with Real Vision clients, with our clients, our hedge fund clients, is there's this debate. And number one, it has a lot to do with the White House, because Michigan, Wisconsin, Pennsylvania, Trump with Pennsylvania won that state. It took him till 3 o'clock in the morning. I'm sure you had some great stories about that night. But bottom line is, how do you win Michigan, Wisconsin, Pennsylvania, Ohio with a strong dollar? Isn't there something going on in the White House around intervention? There's a lot leaking out around intervention, but do you think the White House is going to make a move on the dollar? That's my question.
They may or may not. This will be a Trumpian decision. It'll be up to him. And so I don't think anybody can predict that. But I think there's something worse going on, is that the trade thing has been mis-executed and completely unorganized. And so even though we need to right size and create more symmetry in our trade experience with China, they didn't do it right. I mean, they could have teamed up with the Europeans, collectively bargained with the Chinese. It would have had 46% of the global economy, 700 million people, and that would have probably been successful. And if it wasn't successful, they could have then said, the business leaders, large and small, okay, it's not successful. We're going to go to tariff parity with China, and we're going to go 2% a quarter for 10 quarters. And so 2.5 years later, you end up with a 20% tariff on China, but now you've signaled to the entire business community where you're going, and you've done it with some high level of predictability and consistency. And so the president didn't do that because that's part of the narcissism. He's got to do everything himself. He's got to prove to everybody that he can take it on and handle it himself. You know, and when he ends up firing people and blowing them out of the White House, he'll always say they didn't have anything to do with any of his success or his electoral success or any of that stuff. And it's the same thing with this. And so he didn't listen to Lighthizer. He didn't listen to Mnuchin. He didn't listen to any of those guys that were really trying to give him advice, Gary Cohen. And so now he's botched the trade situation. He can't get the deal done with China. And so I don't know if the dollar's going weaker or not. Maybe they'll try to devalue the dollar. But they got pressure on them because you have to remember the rates are going lower. There's a specter of deflation, but they're borrowing $1.2 trillion. So if you want to keep the window open to keep borrowing that kind of money, you got to be very careful about devaluing the dollar. You could touch off a dollar crisis. Now you can say, oh, he's exaggerating that because it's the global reserve currency. But I'm not really exaggerating that because another unfortunate thing because of the president's personality, the Chinese and the Russians are teaming up. And so that's never happened before. That's going to be very, very bad. And they want to either put together a basket of currencies or some kind of currency mechanism away from the dollar and the SWIFT system that the Treasury has used to sanction people. And so that combination may make it hard for the dollar.
That's long term. It's a long term structural
So,
problem.
I mean, you're telling me they're going to devalue. Could it help on the margin and in those states? Yes, it absolutely could. It's the president's election to lose, and he's doing everything he can to lose it because he's shooting himself in the foot with the tariffs. He's shooting himself in the foot with the stupid Twitter account. He's shooting himself in the foot with the way he's breaching the global alliances. And it's really unfortunate because on the plus side, he's got a smart attitude on deregulation and lifting and unshackling the economy. He did a reasonably good to very good job on the tax cuts to make the corporate tax system more competitive. But you know, when you got to make everything about yourself, what ends up happening is you're like an island unto yourself. And so we're seeing a precipitous drop in the markets. Markets have an absence of liquidity right now. We believe at Skybridge that is a direct result of the Volcker rule. About $400 billion of prop capital has been removed from the markets. And so now there's no buffer in the markets. And so just bear with me one more second. November 15th, December 31st, markets down 14.25. First 4 months of the year up 17. Month of May down 6.5. Month of June up 8. And then we go down 7, then we go up 5, now we're down 5. My point being is those are wild moves for very, very little news in the marketplace. It's a sign that the algorithmic trading systems have taken over. They have very little principal capital in place. When we're seeing heavy volume, they move, AI algorithms move lower. When you see heavy volume for buying, the AI algorithms move higher. And so this is going to be a disaster. This is the doctrine of unintended consequences of the Volcker rule. You're going to have a real liquidity crisis in the market,
because
which should
what do you mean the sell side's not putting up the capital to make
Yeah, exactly.
markets?
So you're seeing an 8% drop in securities. The market drops 800 points because people step out of the market and there's nothing underpinning
banks
the market.
aren't there putting up the capital.
Banks aren't there putting up the capital.
So this whole dollar
it could
shortage,
unbuckle the ETFs as well. Yeah.
So this dollar shortage argument that is floating out there, and it's gaining more steam and more believers, a global dollar shortage. Think of this 16 trillion of dollar denominated debt that's been created over the last decade and a half, 12 years. And
it's embarrassing.
The Fed is allowed, the global, all these countries, Argentina, for example, 60-70% of their debt is dollar denominated. So when the dollar moves up, it has this vicious effect on the global economy that it didn't have like 10, 15 years ago. So net, how do we get out of this? Because if he can't weaken the dollar too much, but my point is that in those manufacturing states, Michigan, Ohio, Wisconsin, Pennsylvania. He barely won those states by a total of like maybe 200,000 or 300,000 votes combined. So you really need a weaker dollar heading into the 2020 election.
President Trump's acting like he won by a landslide, so he's got all these Republicans shaking in their boots now. But he didn't really win by a landslide. He has an unclear mandate. And if you go back through those states that you're referencing, he's down 7 to, in one case, New Hampshire down 26% in the early swing state polling. So he's not doing well in those areas, primarily because the tariffs have brutalized those areas, particularly the farming areas of those states that you're referencing. So, listen, I mean, maybe they devalue the dollar, or they can do some things to devalue it. I don't know. You have to tell me what happens to rates when they go to devalue the dollar. You're borrowing trillions of dollars. You have the specter of deflation around the world. You're going to devalue, so that means you're going to pay back the debt with dollars that are worth less than the dollars you borrowed.
That's right.
So that should augur for a higher rate, but you have the specter of deflation. I don't know. That could be another setup, another recipe
so I think
for
it's
disaster.
Like we're in the deflation stage now. I think that when they finally start to try to get that dollar down, heading toward 2020, that's when I think the curve will finally steepen on the long end. But
okay, hopefully that happens. But remember, if you're talking about a deflation, okay, that is the Death Star for the global economy.
Absolutely.
That is Darth Vader's out there. He's going to hit a ray gun on the earth because, as you know and I know as economists, deflation is a debt destruction device. If I've got wages of $52,000 a year and I'm carrying $200,000 of debt, you cut my wages in half due to deflation. Look at what just happened to my debt. My capability of paying it back is impossible. I turn back the keys to my home, my car, my farm equipment, my farm, my capital, my factory. I go ta-ta because I can't pay it back. So the American government and the central banking community has been very keen to watch out for deflation. But the president's strategy, unfortunately, has contributed to a global slowdown. You're tweeting like a maniac, and you're tweeting at people. You're specifically bullying individuals in the country, and you're specifically bullying leaders from other countries. You've got everybody in a stultification position, scratching their heads, and now you're seeing the after effect of all that nonsense.
So one of the tail risks that's coming into the market now, and I think you've mentioned this, Jeff Gundlach has mentioned it, is the probability Joe Biden is now suffering the polls. I think he's down like 8 or 9 points in the last couple of weeks. Your left-wingers, your Elizabeth Warren, your Bernies, are rising. So the probability of a left-wing government is risen. As you head to 2020, if you look at the markets, is the market, like, how do the markets deal with this? Because
the shortcoming, some of the stuff that's going on in market activity is pricing a lower likelihood of a Trump re-election. I mean, you have to understand, if you get a socialist president, and the irony is some people say Barack Obama caused the rise of Donald J. Trump. Well, Donald J. Trump could cause the rise of socialism in the United States. There could be a reaction formation to some of these disastrous things that he's doing that could create that. Okay, so I don't know. I hope that doesn't happen. If there's a choice between a socialist candidate and Donald Trump, people will hold their nose and vote for Donald Trump. But then you're going to have 5 more years of craziness. So, I mean, it's a very rough balance. I think people are learning that the policies were, and I was talking very positively about these policies, but I didn't think he was going to go this haywire with the trade situation. So learn about his policies that are positive: deregulation, delayering of the administrative state, competitive taxes. The cut in illegal immigration has also helped the African American and Hispanic American communities in terms of lower middle income wage increases. But the flip side of that is all the cuckoo la stuff is creating this tension in the world, and it's creating a socially divisive, it's breaking the tapestry of the country. So I don't know, maybe that will work. Maybe he'll get reelected because the best thing he's got going for him are the Democrats. I mean, these guys like a clown car of Democrats. They would have been way smarter to pick 2 or 3 candidates, Larry. Look at the donor totals for these guys, Add up the 20
Yes.
Democrats, they almost match the incumbent president in terms of their
The
fundraising.
super delegates are such a dangerous thing in politics.
I thought they did away with them. They're still
Yeah,
they're still
yeah,
using them?
because well, you remember Hillary Clinton had so many super delegates that it was like, even though she was relatively, at one point, a year, 4 years ago, she was relatively close with Bernie, and but at the end of the day, it wasn't close because of all those super delegates.
Yeah, so they rigged the system, and then they had the WikiLeaks drops that proved that they completely rigged the system, and that really hurt her at the polls because she didn't get the crossover vote. Many of the Hillary Clinton supporters, I think it was 74%, voted for Barack Obama, but she got less than half of the Bernie Sanders voters, and guess what? 10% of those voters voted for Mr. Trump. So you had this weird thing happen as a result of the WikiLeaks drop. If she had gotten the same conversion total, Clinton to Obama, if it had Sanders voters, gone to Hillary Clinton, then you would have had her winning the election. So that was a problem. Certainly, I think President Trump, for whatever his weaknesses are, I think he has been a better president, in my opinion, than what would have been a Hillary Clinton administration. But I think he's really he's painted himself into the corner because, you divide in the country. Cuccinelli, I mean, this guy's an Italian-American.
Cuccinelli?
He's the guy for the immigration.
Oh,
he's
yes.
coming up with the wealthy people could come into the country and unwealthy people can't. Okay, I mean, I don't know. Was his grandmother really that wealthy? She was Italian. Was she really that wealthy when she came into the country and helped him get into the White House? It's sort of hypocritical and nonsensical, but that's what we're living with now.
So FANG stocks, you're talking about $4 to $5 trillion of American wealth is now in 12 stocks. So indices have been changed, passive asset management, I want to get into that briefly, versus active. But the FANGs and what the White House and the DOJ are up to, inequality has grown in recent years over the last decade. Not so much Trump's while more the last decade, but some over the recent
20 years, but yes.
So you've got this $5 trillion, it's almost $6 trillion that's in a few stocks. You have the Department of Justice, the FCC, Trump, and Bernie over the last week and a half is attacking them. Google potentially impacting elections behind the scenes, Facebook impacting elections behind the scenes. Give us your vision of the next 2 years for the FANGs with this, left-wing, right-wing Malachi crunch, coming at them with the FCC and DOJ.
And a lot there to unpack. So the first thing I would say is that, it's totally understandable that things flooded in that direction because you had zero interest rate policy and quantitative easing, and everyone flooded into ETFs and passive investing. And so people were going for growth. Those stocks were exhibiting growth, even though that they've got high multiples to book and high earnings per share. In some cases, some of those companies don't even make any money, like a Tesla. All of those things are problematic, but you levitated all those things, and then you got the self-fulfilling prophecy wheel where, okay, they're going up, let's put more money in them. They go up, let's put more money in them. And so what you really have to worry about is you have that liquidity crisis.
You've got a front row seat on this.
Well, that's why I'm in structured credit. That's why I'm sitting heavily in structured credit, because when this thing blows, and if it doesn't ever blow, that's okay too, because the society's becoming wealthier and wealthier, and Skybridge will do well. But my job at Skybridge is to protect people's capital and to grow it nicely, not to bet the farm for those people. And so what will end up happening is when it does blow, you'll have a great unwinding.
So the money will move. So let's just say
you're going to break some of these ETFs, right? You know that, right? Those ETFs are not sustainable if there's a huge market breach.
Yeah. So say $2.5 trillion's gone into passive asset management away from active. So for people that maybe some of the younger people, when you and I were younger, the Fidelity Magellan Fund was the big one with Peter Lynch, and that was the biggest mutual fund. Active funds where all the money was. So now the last 8 years, $2.5 trillion has gone into passive, and that's just plain indexes.
Yes.
And what you're talking about is a potential real transition back to active management if this thing goes.
I mean, if it goes, I'm a big believer that we're in cyclical market environments, and the lack of cyclicality lately has been stimulated and induced by the Fed. And so some of that is like fudging, if you will, or drawing from the future and putting those returns into today. And so I think there could be a residual reversal, and you could see a lot of money leak out of those security. So I would caution people.
So, you know, I think over the last decade, we've gone from, on a hedge funds, we've gone from 2 and 20, so 2% management fee, 20% of the
It's
profit.
probably 1 1/4 and 12.
Is that where it is now? So
Yeah, I think so.
So
That's
we're
what
1
we're paying.
1/4 and 12
Yeah, that's
on
what it
average.
feels like. Yeah, that's what it feels like.
What's the evolution of the hedge fund industry?
It's like our society. The rich are getting richer. The hedge fund community, the people that have the assets are growing their assets, and the other people are not.
In the Millennium model, you know, Mike Gelban's a good friend of mine. He started Exodus Point. That model seems to be, you know, where you have 100 managers in one fund. Is that model stealing market share from the other?
Yeah, I mean, look, I mean, you know, a lot of ways our fund of funds is like an outsourced multi-strat, right? So
Sure.
we'll outsource to who we think are the best and brightest in the space that we want. Millennial and Michael's fund are doing something similar, but they're probably adding more people. But I think the hallmark to somebody like Gelban's success, based on my observation of him, is fantastic risk management. So I think he'll be undoubtedly successful in that business.
So that you see more of a trend toward that.
Yeah, I think, yeah, good players are going to get more money. Weak players are going to get blown out.
What's next for Anthony Scaramucci?
Well, I mean, I'm back at Skybridge. I'm going to grow the assets. We've got real asset growth now, where quarter over quarter we're taking in more assets than are leaving us. We're going to do the SALT conference in Abu Dhabi in December.
Nice.
December 9th to the
And
11th.
are you going to do the SALT again in
We do
Vegas?
the SALT again
So you're
in
doing
Vegas.
back-to-back SALTs?
Back-to-back SALTs. I'll probably put one in Tokyo the year after. But yeah, I mean, it's been great for us. I mean, the SALT conferences, as you know, are great networking opportunities, but it's also great networking for Skybridge. Even though it's an industry-wide event and my competitors can come and also market, I'm a big believer that there's enough wallet out there for each of us to get requisite market of wallet share. So for me, I like doing it. It's an industry-wide event. It raises the profile of the entire industry, and I think a lot of people in the United States, believe it or not, still haven't been to places like Abu Dhabi. I've got Midwestern FAs that I do a ton of business with. I'd like to bring them with me and let them see what's going on around the world.
Another book. You've got 4 bestsellers, two or three bestsellers, but I think 4 books overall.
Well, the last one was definitely a bestseller, and if you don't believe me, come into my basement, Larry. I'll show you every copy I had to buy to make it a bestseller. Okay, so the last one was definitely a bestseller.
What was your favorite book during the writing
I mean, my
process?
favorite book was always the first one. You know, it's like Goodbye Gordon Gekko. I wrote that while we were filming Wall Street 2. I was in the movie with Michael Douglas and Shia LaBeouf and Josh Brolin, and they endorsed the back of the book for me, and it was just a rite of passage story, how to go from polyester to real natural fibers on Wall Street.
You brilliantly co-marketed it into the movie.
Yeah.
That's
Yeah,
pretty great. Not many people can do that with I mean, I
got permission from
enough.
20th Century Fox to do that.
I was fortunate enough with my bestseller to have a big bank blow up, but I thought it was really creative how you got the book.
Yeah, but I mean, the cool thing about
into
you
the
is
movie
like you
launch.
legitimately sold books. I have to make my own bestsellers.
Great to see you again, my
great to
friend.
be
And thanks
here.
for having us here at the Hunt and Fish
No,
Club.
it's great. And try to meatball upstairs. That's on the hidden menu.
That was Anthony Scaramucci with a compelling look at Washington, Wall Street, the U.S. dollar, and the 2020 elections. Thanks for being with us.